What's up everybody? Welcome to the Stocks channel. My name is Cory. Today in the stock market we did see a bounce across the board and we are starting to see some bullish engulfing candles. However, we are still in a bear market and we are at resistance. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up 0.19% and intraday we were retesting those lows and we did close with a very bullish engulfing candle. So just looking at the candles, this was very bullish price action on the daily chart. Now there are three scenarios from here that I'll walk through with the price action. Two of them are bullish scenarios and one of them is the very obvious bear scenario. So in the first bullish scenario, this is a bounce to resistance. We are going to get rejected right around 384 to 385. Come down here and close the gap right around 369. Find support and then finally get a very impulsive face ripping bull rally that could take us all the way up beyond that gap close at 401. All the way back up to retest the high right around 418. So this is the scenario that I prefer, and this is why I started with this scenario, because I do believe this scenario will cause the max pain to the majority. If we continue to go a little bit higher after a bullish engulfing candle, there will be a lot of people that get FOMO and start jumping on the long side, covering their short positions just in time to get rejected from resistance and go all the way back down there to fill the gap at 369. And then while we're going down to fill the gap, everybody will say, that's it. We're going all the way down to brand new lows and we're going to 350 and possibly even lower. They will start to enter short positions just in time to close the gap or likely reverse right above the gap, leave that gap open and then go close the gap at 401. And then again, a rinse and repeat cycle of people getting FOMO possibly before the next leg lower. So this is the bull scenario that I prefer, even though there is another bull scenario, which is that we already put in the higher low and we're already starting the bounce to get the next higher high. And in this scenario, we should see a gap up tomorrow and we should continue to run from there. If we don't get the gap up and run, this scenario is very unlikely going to play out. If you just think about how impulsive price action works, you need to see the acceleration of the price action or you are more than likely getting a choppy corrective pattern and you are not going to see this play out. So in order for this to be the scenario, we should close very bullish tomorrow and we should easily break to that resistance at 390 and possibly even get above it. And we will have that critical resistance right around 396 and the gap close at 401. And of course, there will be plenty of bears waiting at that resistance because we are still in a downtrend. Now, the obvious scenario from here is if we don't get any of the bullish scenarios I just went through, you're looking for acceleration to the downside once we get rejected from this resistance. And we should slice right down through that gap at 369 like it wasn't even there, break down through the previous low at 362 and hit that price target at 350. So the bearish scenario is very easy to envision because we're obviously in a bear market and we are in the downtrend. So there's no reason this scenario can't play out. So don't rule out the possibility that if SPY loses that support zone around 370 to 369, that we are getting that next leg lower at 350. And of course, this is the preferred scenario as long as we do have the downtrend, even though I do prefer the scenario that I went over first. But obviously, stock market does not care what I think. So you need to follow price action. Be aware of all of these scenarios and then have a trade plan to act accordingly. Also, keep in mind that the moving averages are starting to bunch up, so there will be a lot of resistance and support depending on which side the price action is at these levels, right around this bunched up area, right around 383. Because all of the moving averages are converging to this zone. That's either going to be a strong resistance zone for the bears or a strong support for the bulls, depending on whoever wins the battle at that resistance. On the NASDAQ 100 triple Qs, we were up 1.71%, also with a very bullish engulfing candle. However, we did close right on top of resistance at 287 and we are still in a downtrend. So as you know, bears are going to show up at resistance. When you give bears a bear market and you give bears a strong downtrend, they are going to show up in force at resistance. So it's not going to be an easy ride for the bulls to blast through this resistance zone right around 287 to 289. However, if the bulls do break resistance, that should trigger a short squeeze all the way up to close the gap at 299. And then there will be another battle for the bears to win at that 50 EMA, which is right around $300. So as you can tell, while we're in a bear market, you need to get very risk off on long trades around resistance. So even though we could break through this resistance and we do have a bullish candle, there's no reason to just expect the bears to roll over and give up. So I do expect to see some type of fight at this level, which could mean that we go all the way back down to support at 269 if the bears do win that battle. On a break below 269, you're looking for a continuation of the bear market with the next price target at 258. And if the bulls break above the 290s, look for the gap fill at 299, the strong resistance at 300. And if for some reason the bulls can break above 300, you're looking for a retest of the high at 315. In the Dow Jones, we were down 0.37%, so you clearly see relative weakness in the Dow Jones because we did not get the bullish engulfing candle and we did not close above resistance at 311, so you're definitely seeing relative weakness in the Dow Jones, which means we could start to roll over and come down here to the gap fill right around 298 or the previous support at 297, and if we break below 297, the next price target will be down there at 285. The bullish breakout above 311 should take us up to the resistance trend line right around 319. And above 319, look for the gap fill at 323. But right now, this is clearly looking a lot more bearish than SPY in the NASDAQ 100. So don't get bullish in the Dow Jones unless it can start cracking that resistance at 311. In the Russell 2000 IWM ETF, we were up 0.83%. And just like the rest of the indices that we were looking at other than the Dow Jones, as we did get that bullish engulfing candle and we're coming very close to resistance right around 174 to 175. So do expect bears to show up at resistance because we are still in the bear market and we are still in the downtrend. If the bulls get above 175, look for the next resistance at 180. And above 180, we have the gap fill right around 184. And that will be the bull breakout if we do break above that gap. Now to the downside, you're staying bullish as long as we're above 170, but if we break below 170, look for a retest of the low at 164, and below 164, the next leg lower will be down there at 156. So the bears have the advantage of the downtrend, so we still give them all of the benefit until the bulls show it with the price action and break out to a new daily high. On the Arkk ETF, we were up 9.1%, so we're definitely seeing the Arkk ETF showing some strength after that breakout of the resistance trendline and successful retest of the breakout as support. So this is definitely price action that I don't personally ignore because it does look like a bull breakout with a successful retest. However, we need that price action proving it by getting all the way above that resistance at 47. And we will have resistance at the 50 EMA, which is at 45.7. So while we did have a very bullish day, a lot of that could be short covering from shorts that were getting way too ambitious. So we can't really see bullish price action until we get confirmation of that breakout above resistance at 47. If we get rejected from 47 or from the previous high right around 46, it could look like a double top. So just be aware that this is not bullish just because we went up 9% in a single day, because we have not made any significant progress to breaking resistance. To the downside, look for support right around $40 in the previous low at 36.5. And the next leg lower will be down there at 33.7. On the VIX, we are flat on the day, going absolutely nowhere, but the VIX did get crushed when it tried to reach that resistance at $30. So that does look relatively bullish that the VIX is getting crushed as it approaches 30 and closing back down below 28. However, when I look at the VIX, I still see higher lows and lower highs, so I don't see any progress in either direction because we need to get a breakout to know where we're going from here. And the breakout is either going to be the VIX breaking down below 25 or breaking out above 30. And you're obviously getting a lot more bearish if the VIX breaks above 30 and a lot more bullish if the VIX can break down below 25 and get that close below 24. On Bitcoin, we're currently up about 0.8% with Bitcoin trading right around 20,400 and Bitcoin is holding that support right around 19,000. It will look like a double bottom if we get the bull breakout above 22,000, which should take us back up to retest resistance at 25,000. And if we get that breakout, we will retest resistance at 28,000. However, until we get that bull breakout above 22,000, you need to be very cautious because we still do have a strong downtrend, which means we could lose that support at 19,000 and get to the next price target at 12,000. As you can clearly see, the Bollinger Bands are getting very tight, so it does look like we'll get more consolidation before we see an expansion in volatility. So just be aware that it's bearish below 19,000 and bullish above 22,000, and don't do anything until we see a breakout in either direction. On NVIDIA stock, we were up 3.04%, and NVIDIA did come back up to retest that resistance at 150 after breaking down below that level, which was our price target. So it's more than likely that we either overshot the price target and now we're going back higher, or we're going to bounce off the price target as resistance and make the next leg lower at 130 or 125. The one thing about NVIDIA you need to be aware of is that it is in a very strong bear market and a very strong downtrend, so it is a falling knife at this point in time until we see some type of bullish breakout, which won't be until we get all the way back above 161. There is a gap to fill right around 159, so if we do get a bounce in the short term, we could go back up to about 159 to 161, but that will be critical resistance, which means we could get rejected and still make that next leg lower. If we break above 161, we'll be getting a lot more bullish for the retest of the gap, which is right around 177 to 179. And if we break above that gap fill, we have strong resistance at 196. Keep in mind, these are downtrends until they're not, so stay bearish while we're below resistance. On Tesla stock, we were up 2.55%, and Tesla did close right at resistance at $700 and is very clearly in a consolidation wedge, bouncing between support and resistance, making higher lows and lower highs. If we break above 700, look for a retest of resistance right around 743 to the 50 EMA at 755, and above that we will get the bullish breakout and retest of 775. The bearish breakdown at this point will be the rejection off 700, breaking down below 650, and then breaking down below the previous low at 620 for that next leg lower at 571. So watch price action at these levels and know the breakdown or the breakout above resistance, and then you can make a trade plan to act accordingly. Otherwise, in the short term, if we break above 700, we're heading back up to about 743. On Apple stock, we were up 1.89%, and Apple did have a very bullish candle today and did close above 3 of our 4 moving averages, and so far it does look like a bullish breakout above the resistance trend line. So Apple above 141 is looking a lot more bullish, and the next resistance is just above right around 145 to 146. And if we break over the 50 EMA, we have that strong resistance at 150. To the downside, look for support right around 139 and 137. And if we break 137, it is very likely that we'll fill the gap at 133. And below the gap fill at 133, we have strong support at 130. If at any point we lose support at 130, the next leg lower is all the way down there at 120. On the financial sector, we were down 0.35% as the financial sector closed right on top of the 5 EMA and still holding that support zone that we continue to bounce off of, so it's still possible to get a counter trend rally in the short term to go close the gap above. We're still in a bear trend, so if we lose support, you need to get ready for the next leg lower. The industrial sector was down 1.5%, still looking bearish below all the moving averages and still in a strong downtrend, but it does look like we are consolidating, getting ready for a next move in the market. The healthcare sector was down 0.58% after intraday bouncing off support at the 20 simple moving average, and it does look like we will need another breakout above that 50 EMA and above the resistance trend line right around 130 to get the bullish breakout. On the energy sector, we were down about 4% today, breaking down below support at $70, so we could go for that next leg lower, but it does look very bearish with the quick waterfall wave of selling and the strong downtrend, so we could be getting a little too oversold in the short term and maybe due for a bounce, which could take us all the way back up to the 50 EMA. So jumping back over the S&P 500, this is going to be a very critical week because we are about to see a breakout in either direction. So know that critical resistance and know these critical support zones, and make sure you're not getting too whipsawed in between resistance and support. Save a lot of your dry powder and get ready for the breakout in either direction and then act accordingly. If you wait for price action to confirm the next move, you will win a lot more of your trades and you will be in a lot better risk reward setup. So try not to get whipsawed in between the breakout, just wait for the breakout and then act accordingly. Always use great risk management, and remember, this is still a very volatile bear market, so be patient and have a solid trade plan, and this is not the time to be guessing or taking on way too much risk. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.